With the US CPI print due to come on Wednesday, the Federal Reserve is on the brink of initiating a rate cutting cycle. Short-term interest rate markets price 4 rate cuts this year, but there's only 3 interest rate meetings. So that means the Fed must deliver a 50 basis point rate cut at one of those meetings for the STIR markets pricing to be correct. So as of now, STIR markets assign a 36% probability that the September 18th meeting will feature a 50 basis point cut, but the CPI print could be key. Now, if you notice here, you can see that the event of the US CPI tends to see upside in stocks heading into the print, and there's been a median return of 0.88%, 71.67% winning trade percentage in the 5 days preceding the CPI print. So it's definitely worth being aware of dip buying and stock buying into the CPI on Wednesday, particularly if investors think that it will be weak enough or low enough that a 50 basis point rate cut may be anticipated. So will we see the US CPI print lift the S&P 500 to start the week? Noticing the S&P 500 next major support sits around that 5,300 region. And then we are in sort of broad support area around this 5,440 region. Whether it holds or not does remain to be seen. And the next overhead resistance is back up at that 5,600, 5,650 region with this steeper trend line that was broken on the start of September, in line with the weak seasonal month of September for stocks. All outlooks have risk, and the major risk here lies in inflation surprising to the upside, which could reinforce the higher for longer narrative regarding interest rates, dampen the market's rate cut hopes, and send stocks sharply lower. Remember, don't just trade it. Season Exit, come along here to Season X for literally thousands more seasonal insights just waiting to be revealed.